Good morning, ladies and gentlemen, and welcome in the Limelight sessions with the topic of Youth Financial Inclusion and Literacy in Indonesia, a closer look. I'm Sofwan Hakim from AFTECH Secretariat, and I will be moderating this morning sessions. The session will be delivered in English, and before we begin the sessions, I would like to let you know some house of rule for the sessions. First, please make sure that your connection is stable. When you are logged in at the webinar, your video and your mic will be automatically inactive. You may post your questions on Q&A box and your question will be discussed after the panelists have completed their presentations. On 11 November 2020, President Joko Widodo has officially opened Indonesia Fintech Summit 2020 and Indonesia National Fintech Week 2020. National Fintech Week or Pekan Fintech Nasional is a series of events that serve as a medium for government, regulator, fintech startups, and other stakeholders in Indonesia's digital finance ecosystem to undertake concerted efforts in accelerating national economic recovery through adoptions of fintech. National Fintech Week 2020 aims to increase fintech adoptions in the market by amplifying online shopping campaign promotions. It also shows a collaboration within the Indonesia's digital finance ecosystems with objective to support national economic recovery. Together with us, we have distinguished speakers from the Asian Development Bank team, and we are going to discuss very interesting topics on some initiatives related with youth and financial inclusions, which includes the National Youth Financial Inclusion Strategy, Youth Findside Survey, Y Bank, and Youth Financial Inclusion Ambassador Program or DICA that have been initiated by the Asian Development Bank together with also Indonesian government. Together with us, we have Ibu Purnima. Ibu Purnima is a financial sector specialist and financial inclusion focal point for Indonesia. And she has been working for the Asian Development Bank for more than 8 years as a financial sector specialist. And she graduated from she got a PhD from Ritsumeikan Asia Pacific University in Asia Pacific Studies, MSc in International Development from University of Manchester, UK, and MBA in Finance from Ritsumeikan Asia Pacific University in Japan. And selamat pagi, Bu Purnima. Good morning, Bu Purnima.
Good morning, Pak Sofwan.
How are you, Bu?
I'm good, Pak. Thank you. How are you?
I'm good too. I'm good too. Okay. After this, we have also Ibu Jamie Solil. Jamie Solil began her legal career in New York in commercial litigation firms. And in the year 2000s, she moved to Italy and worked for an Italian commercial law firm. And in 2005, she shifted her career focus from the private sector to a law and development focus, specializing in financial sector regulations and financial consumer protections in developing countries. Ibu Jamie now has consulted for a variety of development-focused organizations, including development banks, multilateral donor organization, and consumer advocacy organizations, including Consumer International, a global federations of consumer advocacy organization, where she worked on financial consumer rights and access to redress initiative throughout Africa and the Caribbean. Jamie now also collaborates with the Asian Development Bank on financial inclusion, financial literacy, and financial consumer protections. Good morning, Ibu Jamie, and I think good night at your time. Thank you for joining us.
Hi, everyone. Good morning, Pak Sofwan. Thanks for having us.
Thank you. And we have also Pak Dipo Satria, with more than 15 years of experience in the financial market, management function, and technology. Pak Dipo is the co-founder and CEO of Dana Didik. Is the first and one of the few entrepreneurs tackling the lack of education financing in Indonesia. Based on personal stories around him, Pak Dipo realized that a large number of Indonesian youth do not have the opportunity to enter higher education. Dana Didik is a peer-to-peer lending for education with a mission to create a world where everyone can obtain higher educations. And before this, Pak Dipo was the director of investment banking at Macquarie Capital Securities in Indonesia. Having experience in banking and startup companies, Pak Dipo obtained computer science and applied mathematics degree at State University of New York in Albany, New York State, and an MBA from IE Business School in Madrid, Spain. So good morning, Pak Dipo. Selamat pagi. Thank you for joining us.
Pagi, Pak Sofyan. Terima kasih, Pak.
Thank you, Pak. And we have also Sahil Nair. Sahil Nair is consultant at the Asian Development Bank, and she's responsible for expanding the portfolio of youth-focused activity in the areas of financial inclusion and environmental sustainability and biodiversity conservation projects within the ADB's agriculture and national resource sectors and environmental thematic groups. And Sahil holds a Bachelor of Arts in Economics and International Relations at Pandit Deen Petroleum University in Ahmedabad in India. Good morning, Pak Sahil.
Good morning, lots of fun. Thank you so much.
Thank you, Pak. And the last but not least, we have Oren Kwan. Oren is currently leading the Indonesian Youth Financial Inclusion Ambassadors Program, and he has previously worked in the national leadership team at IFSE in Indonesia as a finance head for almost 2 years. And she's very passionate about empowering youth financially and has worked on various youth engagement activities for 4 years. So thank you so much for having us, all the audience, and also thank you so much for joining us, the distinguished speakers. I think we will begin the sessions with a presentation from Ibu Purnima, Pak Sahil, and also Ibu Jamie, sorry. And please, Pak Sahil, Ibu Purnima, and Ibu Jamie, the floor is yours.
Good morning, all. Sahil, maybe we can go to the next slide. Yeah, good morning, all again. Thank you to AFTECH who kindly invited ADB for this session called Youth and Financial Inclusion and Literacy, a closer look in Indonesia. And the Asian Development Bank has a long history of support in financial inclusion in Indonesia. And we have been closely working with the government, the OJK, and the National Council for Financial Inclusion and other stakeholders to implement the National Strategy for Financial Inclusion. And ADB takes a holistic approach to financial inclusion, and our engagement in the financial inclusion sector focuses on 3 key areas. And first is access to quality financial services for all. This is including the most vulnerable of the population, including women and youth. And the second is financial literacy and education. And third is financial consumer protection, along with fintech and innovations as a cross-cutting theme across all 3 areas. And all these areas are equally important and necessary to promote responsible financial or digital financial inclusion. Currently, the ADB is supporting an array of initiatives related to financial access, financial literacy and education, and financial consumer protection and digital finance innovation activities in the country. Today, we are here to talk about the intersection of several related areas, youth financial inclusion and literacy, and also fintech. And to share with you the underlying rationale of our initiatives and some of the learning by doing we have aggregated in the process. Sahil, can we go to the next slide, please? So, as you may be aware, youth by legal definition in Indonesia means anyone who is between the ages of 16 and 30, which is a very important segment of the population in the country. This is a very heterogeneous group about which we speak, and in fact, this is one of the reasons why the youth bloc is not fully understood. So when ADB and OJK began to develop the National Strategy for Youth Financial Inclusion back in 2018 as first ever financial inclusion strategy dedicated to youth, we recognized that there was a lack of data about youth financial behavior, their knowledge, or where they even came by information on financial topics, as well as a lack of understanding about their life cycle goals, which may impact financial services usage. So we set out to conduct this research on these issues to inform the National Youth Financial Inclusion Strategy and to engage youth in that process. We conducted the Youth Finsight survey across the country as means of better understanding youth, and you will hear about some of the high-level findings in a moment from the next speaker. This data on more than 5,000 youth across Indonesia was used not only to inform youth financial inclusion policy, but also to inform programs like the Experiential Financial Literacy and Education program and the Career Exploration program called YBank. And it was also used to start the Youth Financial Inclusion Ambassadors program called DICA. And Dika, by the way, has organized this Limelight session today, and thanks to the kind invite from AFTECH. And at this point, I will turn over the presentation to ADB consultant, Jamie Solly, who is a financial inclusion specialist and a financial consumer protection advocate, to talk about FinSight's YBank and Youth Financial Inclusion Ambassadors Program. Thank you all. Over to you, Jamie.
Thank you, Purnima. Good morning, Indonesia. Today, I'm going to give you some high-level findings from the FinSight's National Youth Survey that Bu Purnima mentioned, as well as some of the results from our monitoring and evaluation report to the YBank pilot, which was our experiential financial literacy and career exploration program. This is the first time we've publicly shared some of this information, and we're very excited to share it with you all this morning. But there's quite a few statistics and percentages, so apologies for that. If there's something that catches your attention that you'd like to speak with us further about in another setting, we're very happy to do it. So again, we're going to be throwing a lot of statistics at you, but don't worry, there's no final test at the end. Okay, we can move to the first slide, please, Sahil. So the first slide that I'm going to be sharing with you now is hoping to jar your attention. Bu Purnima initially shared with you the rationale behind why ADB is supporting Indonesia to increase its financial inclusion, and particularly with regard to youth. But what this slide intends to demonstrate is that there's a very large gap between account ownership, so the 55.7% figure, and financial literacy, the 38% figure. So I've chosen to use the financial literacy, or the number of adults with a bank account figure. Some people might use the financial inclusion figure from Findex, which is 49%, or the higher OJECA figure of 76%. But I'm choosing the middle ground just to show you that there's a big gap between actual access to accounts and the literacy rate. And that becomes actually a bigger gap when we talk about youth and financial literacy, because the youth rate is particularly lower for financial literacy. That was measured in 2018 for the first time in Indonesia in the PISA assessment. So Indonesia, out of a maximum score of 1,000 on the PISA exam, scored 338, and the OECD average was 505. So you can see that there's some room to improve there. But caveat is, don't be too disheartened by that low ranking with PISA, because most of the countries that participated were developed economies. And as we say, if something doesn't get measured, it doesn't get done. So it's very good that Indonesia is actually measuring this and taking steps to improve the financial literacy rate. Okay, we can move to the next slide. So we did the FinSight survey as a means to provide a comprehensive picture of youth and their finances and how they engaged with the financial services sector. And we did that because we didn't find a lot of information available about youth and financial services in Indonesia when we started our program work back in 2018. So this survey, FinSights, Youth FinSights, was intended to inform both the national strategy and then ultimately the YBank curriculum for our financial literacy program. So a little bit about the methodology for FinSights. We were able to gather over 5,200 survey responses in 34 provinces in about 3 months, which is a spectacular result. And we were able to do that because we actually utilized youth to help us formulate the survey questions, to disseminate and promote it on social networks, and to actually be the boots on the ground that went out and did some of the surveys, both in person and focus group discussions. So the bulk of the survey respondents, of course, were online, and they were between the ages of 15 to 24 years of age. We tried to balance that. Obviously, a lot of the online respondents had internet access, so that means they were coming from the higher socioeconomic class. So in order to balance those results, we had another data set, which is the interviews that were in person and done actually sometimes in rural areas and with youth of a lower socioeconomic class. In fact, some of the focus group discussions were actually done in an orphanage where the youth resided. So we have those two sets of data, which we can say that are coming from the higher economic group and also from the lower economic group. Okay, Sahil, I think we can move to the next slide. So today what we've extracted is some of the high-level data that we thought would be more interesting to this particular audience, to the fintech sector. Starting with the source of funds, where are youth getting their money? And I don't think this is going to be very surprising to most of our audience, but most youth are still reliant on their parents to pay for housing costs and to give them spending money. So 72% of our online participants actually got money from their parents. And remember that online respondents were the higher socioeconomic class. And 34% of those youth were actually working outside of the home, with only 14% residing on their own. Compared to the lower socioeconomic class, 47% who were working outside of the home and 44% who received funds from 5% residing on their own, sorry. Okay, we can move to the next slide. One of the biggest findings that we saw was, again, probably not surprising. Youth take in more, you spend more than they take in terms of their earnings. So 68% of the higher socioeconomic youth and 48% of the lower socioeconomic class actually exceed their income once per quarter, if not more often. And how do they cope with this excess expenses as compared to their income? Well, this was one of the results that came from the focus group discussions, but it's somewhat disturbing because youth are actually telling us that they are sometimes fasting and they're going without food as a coping mechanism for this state of exceeding their income levels. There are actually other happier solutions. Youth are able to go to their parents and to family members and to receive funds that are not expected to be repaid. With regard to internet spending, we see that about 88% of the higher economic group have made a purchase online in the past year, as compared to 45% of the lower socioeconomic respondents. In terms of how they choose their financial institution, the ATM coverage and the types of services were the top two answers. And also name brand recognition was, of course, a very influential reason for choosing their financial services provider. Next slide, please. Taking a deep dive into the savings behavior, we found some really, really interesting statistics. And I think this is probably the most important part of our findings, given that Indonesia is really trying to secure youth participation in the basic simple savings accounts. We found that 86% of the higher income youth actually have a savings account, whereas 50% of the lower socioeconomic class have a savings account. But caveat here is that only 20% of the higher class and 35% of the lower socioeconomic class have actually made a deposit, or have never made a deposit into those accounts. So basically it's essentially a transactional account that somebody else, probably mom or dad, is putting money in and the youth is just using the funds. Another interesting fact that we found was 50% of the online and 30% of the in-person surveyed youth indicated that their bank pays interest. So we have a situation whereby youth are being encouraged to save, but is that really an effective savings mechanism? And we see here this next statistic, the 62% of online youth surveyed and 72% actually save money in a safe place at home. So we think that behavior really shows this problem or disconnect with regard to the products that are offered on the marketplace, a savings account that doesn't pay interest and which probably dings them every time they take a withdrawal. It's not really suitable to their needs. We think this means that youth need higher liquidity, and perhaps that's why they are opting to save at home. We also see that 29% of the online respondents save on their mobile phones, and they might be doing that in the form of a phone credit or on a mobile wallet. And 13%, surprisingly to us, are still using arisans. And another interesting statistic we found about the savings behavior is that 37% and 17% of the youth said that they're using their deposit accounts as a means of saving for their retirement years. So again, flash backwards to that fact that a lot of these savings accounts might not be paying interest. We find that could be a fairly ineffective means to save for retirement if they're putting their money in a basic savings account for that purpose. Okay, next slide, please. Other formal financial services that are used by youth, credit cards are a little bit low. 20% of the higher socioeconomic bracket are using them, and 82% have used them in the past 30 days. So the column on your left represents use, and then you see the chart on the right-hand side of your screen on the slide represents frequency of use. So with regard to the credit cards, an interesting finding that we had from the focus group discussions was that youth are actually sharing credit card usage amongst friends. So everybody goes out and maybe one friend has a credit card and they put the dinner on that credit card, and then everybody else pays, contributes to that friend. So we thought this would be interesting for the financial services sector to explore a bit more about this and to understand, are these youth doing it because they themselves cannot have a credit card and their friend can? Or is something else going on? Is there a particular product that could be developed out of this? Is this an opportunity for the fintech sector? We also saw internet banking is fairly high, 49% amongst the higher socioeconomic group and only 15% in the lower end. And health insurance is fairly high, excuse me. And this is the state-funded health insurance that we're talking about. So 70% of the higher economic class have it, and 61% of the in-person interviews. So we found that finding very interesting too, because you would think that the lower economic class would have more access to the state-funded health insurance, but that wasn't the case in our findings. With regard to the newer financial products like crypto, we're finding very low 8% usage amongst the higher income bracket and 0% for the lower socioeconomic bracket. Okay, next slide. This was a really interesting portion of the FinSight survey for us. When we looked at the financial management skill set, financial education levels, and sources of information, where are youth going when they need information on financial topics? With regard to that, we found that most go to the internet, 68%, that was a top finding. And second finding was they go to their parents. So either of those two sources could be problematic because you don't know what reliability the websites they have or the influencers online that they're listening to have. And if they're going to their parents, that could be a good thing, but it could also be problematic if the parents themselves do not have high levels of financial literacy. So youth themselves are recognizing that they may lack the necessary ability to manage their financial skills. We see that only 29% of the higher economic bracket and 35% of the lower bracket said that they actually feel they have the requisite skills necessary. So they're recognizing that they need to learn more. Very interesting finding for us as we move to designing our financial literacy curriculum was that 70% of you said they are learning about these topics in school, but they seem to be very high level. They're about macro level economics, and a lower amount of the youth said that these were actually useful for them and relevant in their day-to-day lives. So 30 and 21% said that this information that they get in school is actually useful for them. Okay, we can go to the next slide. So what happens when we have low financial literacy levels? In the FinSight survey, we took some questions and modeled them upon the PISA questions. So we looked at some issues like, do youth understand the time value of money, the difference between gross and net income? Do they recognize a really obvious potential financial fraud when they see it? And are they able to understand concepts like risk diversification? And the answer was yes and no. Youth performed fairly well on understanding the time value of money and the difference between gross and net. But the problem area was with regard to financial fraud and understanding risk and appreciating risk. They did not do particularly well. And this is problematic. In particular, it came out in the discussions with the focus groups that many youth didn't recognize a Ponzi scheme when it was really blatantly obvious. So an unlicensed investment scheme. And they really didn't recognize that the MLM schemes are not a valid business model. So we found that to be a particular area where regulators might want to look into doing awareness raising with youth on fraud recognition. Then our final findings, because again, we looked at the holistic composite of youth and what their aspirations were as well, and how the financial services needs would link to their aspirations. We found that youth have really, in some respects, unrealistic expectations, both with regards to accessibility of education and financial services for education purposes, and both with regard to their fairly lofty expectations for dream jobs. And while we don't want to discourage anyone from dreaming, we want to have them appreciate that realistically they need to really think about how to prepare financially for some of these future goals. So for example, with regard to the education, it came out in our survey that youth were actually assuming that they were going to be able to access these higher level government scholarships. But the reality was that only 13% of our surveyed youth were actually getting these scholarships. So there was a disconnect there. And there was also a disconnect with regard to level of salary expectations. So we had about 38% of the higher socioeconomic group expecting that they were going to earn over 50 million per annum. That might be realistic for some, but probably not for all, especially if we're talking about provinces outside of Jakarta. So not surprisingly, youth do have these lofty goals and their futures will have financial implications. So that's why we thought it was very, very important to ground them and to really work on the financial education component. Okay, we can go to the next slide. So we used the FinSight's information both to inform the National Youth Financial Inclusion Strategy and to inform our YBank curriculum. And what was YBank? It was a pilot financial literacy program that used this concept of experiential learning. We're hypothesizing, of course, that youth lack experience using financial services, and maybe that's why they have lower levels of capacity, and that financial education, as it's taught in most schools, is somewhat dull. So we wanted to do something very engaging and very experiential, which was relevant to youth at their phase in life. Okay, we can go to the next slide. So the YBank program was divided into two phases. The first phase was what we would call the classroom component, with 4 one-month each modules focusing on the topics of earnings and careers, systems of exchange and money, the financial ecosystem. Who are the actors in the financial ecosystem? You have your regulator, you have your industry, and you have the consumers. And then what was the finance? What does the development banker do? How is finance used as a tool for development? So those were the 4 main topics we covered in the classroom component. And we utilized, again, the experiential module, the experiential pedagogy. So what would happen is youth would learn about these different topics from a guest lecturer, and then they would actually go out in the field and study and replicate and think about and critically analyze what they were able to do with this information. We had, at the end of the day, we had 44 youth who started the program with us and 41 completed the whole program. So it ultimately was 1 year long. After the classroom phase, there was also an internship phase. Okay, we can go to the next slide, please. So again, how do you teach experientially? We really engaged with the financial industry very deeply. And we had about 24 different participating financial institutions, some of them fintech, one of them as a guest who's here today to speak with you later in the program. And these guest speakers were from 7 different countries. So we really had them come and talk about, what do you do as a development banker? What do you do as somebody who works with artificial intelligence? And have youth be exposed to these potential career paths. So after the classroom component was completed, then youth had internships and they were placed with either the regulator or various actors in the financial services sector. So you see a list here of where they did some interning, some with Genius, some with Danadidic, and a host of others. Next slide, please. And we were very lucky to be able to do this with the support of ADB and OJECA. And lucky in that we are probably one of the only financial literacy programs that I have seen in quite a long time that was able to monitor and evaluate the performance of the pilot. And we had some very interesting findings. We did a post-test at the end of the classroom component to understand how knowledge improved, and it did improve by those sums to the left. And we also did a secondary post-test at the end of the student's internship phase. So some of the very important findings for us, and this was again 1 year on in the program, that youth financial behavior actually changed as a result of their participation in this program. 90% reported that they're saving and investing more as a result of their participation in YBank. And 92% reported that they're actually updating their budget on a regular basis. The next statistic there, the 62%, is one that makes me incredibly happy as a financial consumer protection lawyer. 62% of the students stated that they now are very likely to read the terms and conditions of financial services agreements before buying. So it's phenomenal because you do not see those statistics in the regular population. And this is a very, very good marker of good fiscally savvy behavior on the part of the students who participated in the program. So all in all, the pilot was successful in demonstrating its hypothesis that a clinical style or an experiential style of learning financial information has a much more demonstrable and favorable impact on youth's financial behavioral change. So again, this was a pilot and we had a very controlled setting. It was a classroom setting. And now we are in the process of digitizing this YBank program and expanding throughout the country. So we're hopeful that we will be able to have the same similar high level results with the YBank 2.0, as we're calling it. Where are some of our students now? Well, very proud of 2 of our students who actually participated in the OJECA Cuencu contest that just was completed last week. They came in 2nd place, but they're first in our book. And we also have students who are starting their own startups. One is pursuing a certified financial planner license, and she also has a startup which does financial education. And quite a few of them who completed the YBank program are now working with DICA, which is ADB and OJECA's Youth Financial Inclusion Program. And DICA is currently going on. They're on their next cohort of financial inclusion ambassadors. They have 30 ambassadors right now. And these ambassadors work on the university campuses. They're engaged in 10 different universities, and they do financial literacy events and financial consumer protection events. In addition to doing their own ambassador work, they also are involved with OJECA and with ADB in some of our other programmatic work with regard to financial inclusion in the country. So they're very active, and we'd be happy to discuss and dialogue and collaborate with any company that wants to talk with us or have further discussions on DICA. And so now I'm going to turn it over to 2 of our DICA stars. Sahil Nair actually works as an ADB consultant on youth engagement, and Oren Kwan, who is the lead for the DICA program, the Youth Financial Inclusion Ambassador Program. Sahil and Oren, over to you.
Thank you so much, Jamie. Very insightful presentation. I'm sure everybody really enjoyed it. Now, before we start our program, our interactive program, I actually want to bring attention to the quick poll that's going to happen in front of your screen. You might, I think Pat Sofan might be organizing these polls, and which you will see in front of the screen. And if you could quickly answer those polls, what we will do is we will use that information in our discussion in the upcoming part of the session. Pak Sofan, it's something that's going to be happening soon, right?
Yes. Please, everyone, you can choose the options from the poll. I think it's increasing. I think we have 80% participants. Please, for those of you who are not kindly choose the options.
Great. And slowly, we all will see the results on the screen later on after everybody has participated as well.
Yeah.
If I'm not wrong.
Yes, this is the result. Do you work with youth or young people as a market segment? And I think 54% yes, I do.
Okay. All right. So thank you so much for participating in the poll, and thank you so much, Pak Sofan, for organizing the poll as well. Meanwhile, once we get the responses on the screen, what I could do is, right, amazing. Perfect. So meanwhile, so this discussion is with a very special guest of ours who participated in the YBank program, both as a guest lecturer and the host of YBank Intern. He's the CEO of Dana Didik, as introduced by Pak Sofan earlier, and specializes in education loans for youth in vocational school programs. So before we start, thank you again. Thanks so much for participating in the poll, and thanks so much for Pak Deepo for coming. I hope you had a great morning so far.
Thanks.
And to start off, if you could quickly share your experience with youth, and especially on the products that you're working on that engages young people.
Sure. So I think, as you mentioned, right, we are a education loan platform. I think in terms of dealing with youth, obviously our borrowers are mainly youth. We do work a lot with vocational students, higher education mainly, some training and certification program. And I think the second market that we work with are actually the young professionals. And so these are youth, like the later stage of the youth, right? So youth who is already working and they want to invest or they want to become a lender in the platform. So I think, although people say it's the same bucket, I feel like they're very different. I think youth is super, super interesting as a group. I think you're on mute, Sahil.
Right. So thanks. Thank you so much for that. And this is it's a good transition to the next topic of our discussion, which is the financial literacy gap among youth. Like, youth are becoming more and more exposed to financial services and products, and which is amazing. But it's very evident that because of all this information that's accessible, how do you find that young people understand these products and services? And as we saw in what Jamie presented, with the combination of low basic knowledge of financial products and services, how susceptible are they to fraud and risks? And why do you think this gap exists, and how can we mend that gap, and what can the fintech industry can also do about it?
Sure. I mean, so I think on the gap specifically, right? I think the youth is is a very different group, right? So I think Jami mentioned before in her presentation, right? I think in general, right? I think it'll be interesting to see how much money they actually, an average rate, how much money they actually have in their accounts, right? So I think from my perspective, there's two problems, right? I think the first one, youth usually has little or almost no money just in general, right? So a lot of the money they get from their parents, they use it for day to day, right? Or even if they do, it's like very limited, right? In terms of money. And I think secondly, the most important thing, right, when it comes to gap, the timing has to be right, right? So I think youth, they're very tech savvy, right? They read a lot from the internet, more than any other generation, and they're usually only interested when there's a need, right? So the timing has to be right as well. So the first problem is there's limited money, and B, the timing has to be right. So if you talk about like some of the products, right? For example, I think there was a lot of discussion about saving and budgeting, right? And I think saving and budgeting only makes sense when you have extra money in the bank, or if you know you're gonna get a stable future cash flow or future salary, right? If you only have like $10 in your bank right now, there's really no point of planning about budgeting per se. There's no need, right? At least there's no immediate need to learn about it, unless in a setting. And I think borrowing is the same, right? For example, in our case, right? Students, they only borrow money when there's a need, right? And so when you talk about students, right, the lending products that works is only two. The first is the education loan, and the second is usually electronic financing. And none of them occur that often, really, right? Like you only buy a cell phone every 2 years or a laptop every 2 years. When you talk about education loan, right, the need is only like every semester. So it's not like a monthly thing like any SMEs or any microfinance, right? So again, about the timing. I remember like Dana Didik, right? We try to work with insurance in the past for youth, right? It's a huge market. Like a lot of people want to enter it, but like you have to enter it right. And I think the biggest problem, youth, they don't think about insurance that much, right? It's like, it's so long term for them, right? They don't think about healthcare, they don't think about any of these problems, right? For them is like, how do we make money, right? So I think in general, in terms of all the fintech product, right, I think the gap exists because of the two. But I do think what product would work well is actually investing products, right? Right now, there's a lot of investing in stocks, investing in peer-to-peer lending, investing in debt, right? Uh, and right now, right, with technology and everything, the investment size is pretty small. I think with roughly like $5, $10, you can invest into any platform these days. You can buy stocks with only $10, and I think those products are very appealing for youth. I think that would be a great angle for anyone to enter the youth market, right? Because they don't have enough money, right? They want to make money, right? But it's so limited. So I think investing products is the way to go.
Right. So which brings me to also ask, like in these investing products, as we saw in the FinSights results as well, like there might be some MLM schemes involved where people might be very eager to participate, but like that time, so before they start earning money, there might be a certain level of education that needs to be somehow communicated to the people before they start earning money. So like, which brings me to the next question as well, like what do you think is the best way to learn for young people when it comes to financial literacy and to make sure that they have a certain education. Um, we also asked the audience about this. Yes, according to you. So let's try and see what the poll responses are. But meanwhile, once we get it, like, what is in your opinion the best way for young people to learn?
That is a great question, Sahil. And I know OJK has been doing a lot. I think with DICA program, I do think it's important, especially when it comes to fraud and all that. Um, and I do think, right, anything online, any gamification usually works well. In general, I would think when it comes to learning, any like reward base. The youth is very transactional as well, right? Like let's say if you're doing a course and if they see no benefit in it, they won't be interested as well. I think they're very transactional, just in general. So any reward base, I think, would be interesting. um it could just be part of school program. I think that would be something mandatory that would be
What are
helpful.
your views on social media influencers and intensive online uh, promotion and marketing in general?
I think when it comes to like learning, right, and all that, I think the social media is not as good. I think it's good for like branding, but not really good for selling, right? So if you're selling the financial literacy, I don't think social media is the place. Just because there's so much noise in social media, right? And like, how do you make it hot among all the different topics in social media, right? Like, again, unless there's a reward, I don't think the youth would be engaged that much. And if you do want to do like a social media, there has to be some reward, right?
We do have these results also. What are your thoughts on this? Most of the people said that inclusion in the school curriculum is the best way to go. Um, Although, as one of the things that we found out in FinSights also is that when it comes to financial literacy, it's kind of indirectly involved in the school curriculums rather than directly. It's mostly in a macroeconomic scale and economics and basic budgeting skills of organizations, but nothing related to personal financing. or personal budgeting in general. What are your opinions on it?
Yeah, I mean, if you want to reach scale, right, just put it in a school curriculum. I think that would be the best thing. But I think then there's a question, right? Is the teachers ready to teach these programs? I think that's another question, right? I think your research said that, oh, like 62% reads the terms and conditions. Man, you should do that for adults. I don't even think the teacher does that today. So, but I think if you want to rescale, I think school is the best way to go. Make it like just make it mandatory, right? And I think now with COVID, right, it could be like some sort of online, and I think that would be the best way.
Right.
And it's, I mean, start early. I think you don't have to wait until they grade, the high school, right? You can even start early when they're in middle school.
Right. Something a little bit more practical in approach. Like that's something that we also try to do in our Y-Bank program, because that's how, like as you mentioned, it's like gamification is one of the ways also to make sure something like this happens. So that's what we tried in the Y-Bank program as well. Hopefully that can happen in all the schools.
Indeed, indeed.
Right. So I'll pass it on to Owen now, my colleague. Owen, could you introduce the next question as well?
Yeah, thank you so much, Pardipo, for sharing your thoughts, and thank you for the audience again for sharing your opinion about the best way for you to learn. And learning from the survey, there are various behaviors that are attributed to youth, especially when it comes to finance. And hopefully all the different ways that we discussed earlier can help them to show these behaviors. So on top of having knowledge and skill. And in your opinion, what are some notable youth behaviors that you find very interesting that may have not been addressed by the industries or the providers yet, Padipo?
Um, I think in terms of, sorry, the question is more about the behaviors or more about like
Yes.
what's not being addressed. Okay. Well, I think in general, right, I think youth is, I think one of the reasons why uh, we like youth as well, right? So a lot of, for example, right, in Danadidik, a lot of our processes are online. And I think for youth, right, to use technology, it comes so natural to them. I mean, you could have like a super complicated process or even like a very long process, right? As long as it's technology driven, right, they will figure it out. So I think that's one of the best thing about youth. I think the other interesting behavior that is very different with other groups is actually they're very knowledgeable, right? They would do their research online. They would find articles, they, it may not be like from like a reliable source, but they will do their homework, right? They will check with friends, they will check with family, is this a good advice? Or like in our case, right, and when it comes to lending money, they would check like, is the rate correct? Is Dana Didik registered or JK, right? They would check with their family, is this the right rate? And all of these things. I think that's one of the, that's kind of, I think it's very different with the other ones. And I think the thirdly, I think they're very demanding as well. Youth can be very impatient. They're very demanding with a very specific need as well, right? I think um, a lot of them are a bit naive. I think it was kind of like highlighted a bit in the presentation before. They have high expectations of salary. And so I think there's a big gap on like what they learn in school and what they they will actually do when they work. So I think generally they are more demanding in terms of like customer service and all of that. And I think lastly, I think that's it. I think that's the three main things we hear, right?
I see. So, if I can try to recap what about your opinions about the some youth behaviors that can be addressed, is that first, it might be better like for every services to be driven by the technology, and then it has to be customer centric, and also definitely we have to provide a lot of information that might be engaging for them, as well as trying to give them the assurance that okay, in the future that you have a better cash flow as for since they have quite a high expectation to the level of income that they're expecting. Yeah.
Correct.
And then addressing these youth behaviors and goals, because we also need to consider that they also have future goals, right? So it's not really just about short term, but they also have future goals. How does the fintech tailor its product to meet youth demand? And in this case, you can probably share some examples from your experience or from other people's experiences, how in some practical or applicable ways that what can fintech do, to tailor the youth demands.
Sure. Well, I think first of all, right, for youth, usually there's a lot of research that needs to be done, right, when in terms of product itself, like what is their need, because their need is very specific, right? I think I think Jami mentioned before, right, like one credit card is shared by five, right? I mean, that's super important. Like, I'm pretty sure a lot of people ask that question, why? So I think first of all, does need to be a deep research. It could be like, I mean, for example, in Indonesia, a lot of people use Genius, right, just so they can access Netflix and whatnot, right? So the need may not be, oh, they need a credit card, but the need is like, oh, I need to pay for Netflix, right? So I think you need to get to the bottom of the problem, right? So that's the first thing. And I think secondly, I think for youth in general, it has to be just cheap, right? I think money is always constrained. They're very cost sensitive in general. And and they do their research, right, to save like $1 or $2 or whatever it is. And I think thirdly, so I think depending on the objective, right, like how could you tailor, right? I think the need is usually something very cheap, or it helps them make money, right? It doesn't even have to be a lot of money, but it has to be between those two, right? The product, and just very very tailored for the youth, right? More technology driven, less process, very quick, right, and all of that.
All right, thank you so much, Padipo. And
Thanks.
as youth myself, I do agree with what you said earlier about that. Despite all the innovations, all the services or the products that being offered, eventually it comes down to just one or two very simple reasons. Yeah, we do agree with that. Yeah, and hopefully we are seeing more fintech companies who can address the simple needs that youth, because probably these are just the ways that fintech can be tailored to meet youth demands. Yeah, thank you so much, Padipo.
Thanks, Amar.
So I think maybe that's actually already the last question that we have so far. Do we still have time for the question and answer from the audience, Pak Sofwan?
Yes, we still have, I think we have 10 minutes for the question and answer from the audience. Yes, we have a questions from Raja Alia Fatima Raja Abdul Aziz. Was there any further studies done as to why youth choose to share credit cards among friends? Perhaps Jamie can answer the questions, or Sahil?
We know, but we're not going to tell. I'm just joking. I actually don't know. That was one of the issues that we flagged to do further research on for the industry. That, as well as the savings behavior, we thought were fascinating. So if anybody is interested, maybe that's a discussion we can have at a later time. We thought that was something that would pique the curiosity of the fintech industry. But unfortunately, we don't know.
Yeah, if I may add something to that question, it is exactly what Padipo said earlier. Probably there are some services or product that has not met the youth demands. For example, maybe one of the reasons why people are sharing their credit card, because first they did not get accepted, or they're not above the age limit where it can allow them to have the credit card. When for the entertainment purposes or for any other purposes, we might need to pay certain things with credit cards. So that's why there's a couple of particular products that stand out that can actually allow us to do transaction with the credit card, something like that. Maybe it also has something to do with who are this credit card for. So that's probably one of the reasons why youth are sharing.
Okay. So thank you, Jamie, and also Owens. Perhaps if the audience, do you have any other questions, you can put it on our Q&A box, and then we can share and also discuss together. So today we have 137 participants. So thank you so much for joining us. And please, we still have a time, 5 minutes for question and answer. Perhaps if you have any question and answer, you could put it on our Q&A box. Actually, I have also questions on, if I may, just to wait for other questions coming in from the from the audience. So perhaps as you know that the one of the majority answer from the audience is to inclusion the financial literacy or financial inclusion initiative into the curriculums of the educations in Indonesia. So perhaps I would like to know if is there any discussions with the relevant governments or any discussions with the industry in regards to further the inclusions of the curriculums, inclusions of the financial inclusions and also the financial literacy into the curriculums. Perhaps if there's any ongoing discussions, if you could share the further plan or the further discussion that will be undertake. Yeah. Perhaps Jamie or Hill, if you would like to also.
Yeah, Jim.
We did have some initial discussions on that with the Ministry of Education, and as we understand it, they were very open to the process, but it's a longer process. So OJECA has created a series of materials, in particular for high school age youth, that they are discussing with the Ministry of Education in order to integrate that into the curriculum. And I think Deepo highlighted a very interesting point. In order to add to the curriculum, you also have to ensure that the teachers themselves have the capacity to be teaching the content. And what we're seeing with the national literacy rate of 38%, I believe it is, you still have a general national literacy, financial literacy rate that is fairly low. So that might also mean that you're going to have to be training the teachers as well.
Okay, interesting. We have also another questions from the audience from Angru Maoshi. What kind of curriculum do you think will gonna be, and in what grade it should be given? Perhaps if you could share example or experience from other countries. And then the second questions from Dio Anamia. Speaking of the plan or hope on putting finance inclusion syllabus in this school, do you think this action is doable? And just curious if the stakeholders or how ADB and OJK taking part on this plan. I think that's that question also same with my question. So I think we already answered that. Perhaps you could answer first on the what kind of curriculum do you think will gonna be and what grade should be given, and perhaps if you could share any example or any experience from other countries.
On the financial curriculum, financial literacy curriculum, my personal belief is that it needs to be very experiential. And what that means is that youth have to actually do some of the activities. When you're talking about, for example, a system of exchange and you learn about fiat currencies, or you learn about different types of money, maybe in the form of frequent flyer miles or gold, youth can understand that very easily and very conceptually, but actually seeing the application in real life is very different. So what we did in the Y Bank program is we had youth learn about the different systems of exchange, and then they actually created their own system of exchange that they used in the classroom. So that kind of learning, we believe, breeds retention. And these are types of programs, we call them clinical programs in the United States, and they exist for doctors, for lawyers, for pilots learning to fly. You don't just give a pilot a book and say, go study it, and then hope that he's very good in the air. That's really, really incredibly risky. You have a series of simulations, you have a series of exercises and actual airtime, and then autonomy that they practice the skills. So that's how we think that a financial literacy curriculum needs to be. Is it implementable? I don't see why not. We see that it's been done in law schools, it's been done in med schools. It just takes the will and the energy and perhaps a little bit of a different mindset.
Okay, I see. That's very interesting. I think we have one last questions. I think from Ani Minarni. I think Ibu Ani is a teacher. It's very interesting questions. How to educate financial knowledge to my students? And embed it in my subject matters. So I think Ibu Ani is a teacher, and this is very interesting question. And perhaps Ibu Ani can implement something on how to embed it, the financial knowledge into the subject matter in her classroom.
Wow, it sounds like Pak Safwan, we should have a whole other session just on this for teachers and people who are interested in the educational sphere. There are, just to point you to Ojeka, there's quite a few tools online in terms of ebooks that are available. I don't know which age bracket she's teaching, but there are materials that are available for younger, early learners, as well as for high school students.
Yeah, true. It's very interesting, and then we need to have separate sessions on how to develop the syllabus, and then the further technical discussions about how delivering the Y Bank programs into the schools. So I think the time already at 10, and it's very interesting discussions. I wish we had so many times that we could discuss more detail on the financial literacy programs, and also how to include or how to embed the Y Bank curriculum into the syllabus on our educational programs. So I think thank you so much, Ibu Purnima, Ibu Jamie, Pak Dipo, Sahil, and Oren for delivering very comprehensive presentations, as well as very interesting statistics from the largest youth financial inclusion study in Asia and Pacific. So participated by more than 5,000 young people from all provinces in Indonesia. And from that survey, I realized that youth are not just beneficiary, but also youth can play a role in making a greater access to finance. It is interesting also to learn about the Y Bank initiative, as it provides an opportunity for youth to learn about financial services and actively engage them to participate in financial ecosystem and to become more savvy financial customers, as well as open up career opportunities in financial sectors. And then it is interesting also to learn about DIKA, a youth-led initiative envisioned as part of the Youth Financial Inclusion Strategy to mobilize young Indonesians to take an influential and active role in promoting financial inclusion in Indonesia. And then I think all those initiatives are very related with AFTECH works, especially on talent and gender work. And actually it's very timely, as we have just signed an MOU with a research and development agency at the Ministry of Communication and Information Technology. So we will be taking all the insights and also inputs from the survey, from today's discussions, to discuss further with our members and also the relevant agencies, especially Ministry of ICT and also Ministry of National Education, to further enhance our talent and also gender opportunity in the fintech and also financial sector activity. So thank you so much, Ibu Purnima, Ibu Jamie, Pak Dipo, Pak Sahil, and Pak Oren for joining us. And thank you very much for all audience that I think now we have 140 audience that are joining us. And thank you so much for joining the discussion today. And as I mentioned before, we have series of activities such as the FinTech Talk, FinTech literacy programs, expert gym, and other very interesting programs during the National FinTech Week. So please stay tuned with us. Please visit our website, fintechsummit.co.id, as well as our Instagram account, FintechID, to get to know about the topics and also about the timeline of the event. And we will have a series of the event until 25 November 2020. So thank you again for joining us, and hope to see you again in our other event during the National FinTech Week 2020. So thank you very much and good morning. Thank you.
Thank you.